non-residents need a Canadian bank account to handle rental income taxes? If you're a non-resident earning rental income from Canadian property, one of the first questions you might have is whether you need a Canadian bank account to manage your rental taxes. Technically, the answer is no, you don't need one. But practically speaking, having a Canadian account can make tax compliance faster, smoother, and far less expensive. Let's look at why, how, and when non-resident landlords should consider opening a Canadian bank account for rental income and CRA compliance. Why the CRA doesn't require a Canadian account. The CRA doesn't legally require non-residents to open a Canadian bank account. You can collect rent, pay expenses, and file your taxes using international transfers. However, all your Canadian rental income is considered Canadian source income, meaning it's subject to 25% withholding tax on gross rent, or you must elect under Section 216 to pay tax on net income. These transactions, tax remittances, NR6 filings, Section 216 returns are often handled more efficiently through a Canadian financial institution. That's why most non-resident landlords choose to set one up, even if it's not mandatory. Benefits of having a Canadian bank account. Here's why a local account is worth it. Simplifies tax payments. With a Canadian account, you or your property manager can remit withheld taxes to the CRA electronically without expensive wire transfer fees or delays. Faster refunds from the CRA. When filing under Section 216, the CRA can deposit refunds directly into your Canadian account. Otherwise, you may wait weeks for a mailed check abroad. Easier to manage expenses. Property taxes, condo fees, insurance, and maintenance bills are often easier to pay locally. A Canadian account helps you keep everything centralized and traceable. Smooth coordination with property managers. If you hire a Canadian property manager, they can directly deposit rent into your local account before remitting withholding taxes. This keeps your financial records clean for CRA audits. Supports proper record keeping. Having all transactions in Canadian dollars, CAD, avoids currency conversion confusion when reporting income and expenses to the CRA. What if you don't have one? Without a Canadian account, you'll need to rely on international wire transfers, which come with fees and exchange rate losses, third-party property managers who collect and remit taxes on your behalf, longer processing times for refunds and remittances. It's still legal, but not ideal if you want efficiency or cost control. How to open one as a non-resident. Many major Canadian banks allow non-residents to open accounts remotely or during short visits to Canada. Typically, you'll need a valid passport, proof of address abroad, proof of property ownership in Canada, purchase agreement or deed. Some banks even offer non-resident landlord accounts designed for this exact purpose. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.